Good morning, traders around the globe. We write, sorry, I'm just closing my squawk here. We write Thursday, 10th of April, 2025, and I welcome you all to a new episode of our show, When Fake News Gets Real. Before we dive into everything, just a reminder that you can still take advantage, and you can take advantage, and you should take advantage of this offer here for that you can join our community for $1 for the first 10 days. And we are, as Blake already mentioned on our other shows, we are readying a very, very good deal for those who would want to join us. So in the event of this, take advantage of this offer for $1 for 10 days. You can also still trade our trader funding program. And if you need some help in your trading, our coaches are ready to obviously help you. Just before we continue, I must say that our community yesterday was well prepared itself well, and there's been a lot of really good trades yesterday in this market, despite the volatility that we are seeing. Traders in our community, we're all like helping each other out, and there was some really fiercely good trading yesterday. So I need to congratulate everybody in our community for reading this market well, reading it together well. Um, Banking on us to keep them updated and to help them as well to prepare for whatever unexpected events would happen. And as we know, the unexpected happened. But was it unexpected? This, as you can see in our afternoon, was Trump coming out on Truth Social saying that this is a great time to buy. The US will be bigger and better than ever before. And then I made this little comment at the time saying that is he going to scale back on tariffs, perhaps, and telling his mates right now. And less than 4 hours later, bang, he did scale back on the tariffs, barring China, of course. We still have these 10% blanket tariffs on everybody, but he at least scaled back on that. Call it a miscalculation of tariffs versus a lot of countries and blocks. And the market obviously shot away, and risk all of a sudden was doing a lot better. We will run over a few of those price moves and see what is to happen next. Although with Trump and his administration, it's very hard to know what is next. Things could worsen again, or indeed improve. And the main ones now to really focus on is going to be China, because the 125% tariffs on China are kept. There is really the focus for the biggest focus on this trade war ongoing with China. We heard a lot of reactions as well from all different angles. Obviously, barring China, most are positive reactions here, and just a couple of them, von der Leyen and some of the other Europeans as well came out saying that they were obviously very pleased with the pause in the non 10% tariffs, and she was also saying that she consistently advocated for a 0-for-0 tariff agreement between the EU and the US. So Europe is still rather to the side of the negotiation, although they were readying plans for retaliation as well. But clearly, the Europeans are ready to go a bit US side on the tariff side. And also we heard from the EU Energy Commissioner yesterday or overnight saying that there is a potential to buy more LNG from the US. So it does seem that from the European side, there is light. And I would say there is a potential that they would come to some sort of an agreement in the upcoming days or indeed weeks. Um, UK as well is around the negotiation table, as we know. On the other side, there's plans for reviving the economy as well. But as we see, even if cable is higher, as we see the sterling, who yesterday got obviously a boost as well from that pause in the tariffs together with risk. We know that sterling is a risk currency, but the market is not really very confident right now on all things gilt and so on. So we need to be a little careful for the sterling, perhaps. We'll have a look at the rates have a little later, and I'll explain you as well why I'm thinking that way. Um, Elsewhere, yeah. So let's move over to a little bit of other geopolitics. Ukraine is readying. They are planning to discuss the minerals deal with the U.S. administration tomorrow, the 11th of April. So it would be good to watch a bit for those headlines coming out of there, because it could have an impact somewhere on how the Ukraine-Russia war develops right now. There is some alarming comment from Zelensky again out overnight, saying that they found as much as about 155 Chinese nationals fighting for Russia in Ukraine. China responded by saying they have no information on any Chinese citizens fighting in Ukraine, but that is something that is going to, under the surface, continue to make the people nervous around the Ukraine situation. So, and we know European bloc is also very close to Ukraine. The impact on Europe is still lingering under the surface as well. So I think it's important enough to keep in mind that those discussions about minerals are going to be held, and also how it develops with those Chinese citizens. We still don't know whether they are there under their own will, or whether there is more official Chinese involvement, which we will likely not be told officially. But let's follow that situation a little bit. We also know that there should be some Iranian nuclear deal discussions upcoming. Iran, interestingly, said yesterday that they were actually wanting to negotiate with the US indirectly. So I understand from that they are rather going to communicate via perhaps Russia and China. But if there's no direct, because we know that Trump said that there would be very high level direct negotiations with Iran, if there are no real direct negotiations, that may also have a bit of an impact on risk. So that is something that we need to keep a close eye on as well, and that could happen coming weekend. So be a bit careful for any headlines from that side over the weekend. Back to trade then. China asked Australia to have a joint front against the US tariffs, but the Australians have clearly indicated that they have no intention right now to form a bloc with China against the US tariffs. And on the other hand, well, which is kind of understandable. I don't think the Australians want to go head to head with the US. It's just too important, and I don't think that many officially now would like to side with China, at least for now. On the other hand, Australia is reopening free trade talks with the EU, so that is something that may help the Australians as well, if they would find a deal there. And more on the trade front still is that the Canadian PM Carney, he has said that he will start talks with Trump on a new economic relationship that may entail a few things. Will it be just the Canadian US side for lumber, etc., or are they willing to renegotiate a completely new USMCA deal, which would have obviously a pretty big impact on all things Canadian dollar, but also Mexican peso. Okay, Scheinbaum, on the other hand, she's sending Ebrard over to the US. They are going to negotiate as well. Scheinbaum said that she wants everything to continue to be handled under the umbrella of the USMCA trade agreement. But if Carney starts to be willing to renegotiate a few things here and there, we may see a bit of evolution there on the USMCA deal as well. So that is another thing that we need to pay attention to. So as we see, yes, Trump scrambled back because probably they saw where the market were going, what the bond market was doing, had a lot of calls, had a lot of um, comments from the bigger analysts, including people like Dalio, etc. Jamie Dimon was on a couple of times as well. So I think they finally heard the cries of US Inc. as well and saw the markets, and that's why I think they really scrambled back on those tariffs. And but they make it seem obviously as now they have their victory because he's probably going to claim the biggest reversal and the biggest jump in US equity markets and potentially also the bond market in the history of the United States. By the way, just to come back on that early message that he sent, it's interesting to bear in mind what he did during his Trump version one presidency, right? Remember that one day he sent a bit of a message out onto the wires just an hour or so ahead of jobs report. So pay attention to what he says on Truth Social for what's going to happen on the next big data, I say. He can just give us the hint on what is going to happen. At least he gave us a heads up yesterday that there was something potentially afoot on the tariffs. Right. That now being said, let's have a quick look at the data. There was not a lot going on yesterday. As I said, we had those Mexican CPI coming out, but those are March. Whatever happened in March is old news right now. Okay. We also had the FOMC minutes out, as expected. Wait and see, wanting to delay cuts, etc. But again, those were FOMC minutes from the last meeting, well before they knew what Trump was planning with tariffs. So we already heard from Powell in between. So those FOMC minutes didn't really say something, didn't really mean much, especially that they came like literally 30, 40 minutes after he scaled back on the tariffs implementation, or gave us at least a 90-day pause. We had the 10-year notes and it auction, and it was a bit of a strange one because it was actually a very, well, we could qualify that as a relatively good one. Obviously, we saw yields being much higher than they were a week or so ago. So that may kind of explain why we had a pretty good take up, and we actually traded through the when issued. But the thing, what we noted again is that the direct acceptance of the locals were extremely low. So it could mean two things: whether there is no interest from in the US and bond buyers are just absent, or with the indirect accepted, that meaning that people leaving orders before, and we can also safely say that there's a lot of foreign money in there. That was exceptionally high at 88%, that the take up there. So that could mean that still people are interested in buying US bonds. So it's a bit of a double-edged sword, that one yesterday. But we have to note that against what we could have expected, it was actually a pretty good auction. We have another one coming up today, I think, if I am correct. Yeah, today we have the 30-year bond auction, and that's also going to be obviously one that is going to be closely monitored. Now that we know about those tariffs, etc., we have to focus a bit on what's happening in the bond market again, especially that we have seen very, very big moves of late. So keep a close eye on what those 30-year bond auctions will result in, okay? We have had a few data out here as well. If you see here, there was a big move out of Japanese foreign bonds. Okay, that was something that I was saying that was possible that to happen in the new fiscal year, which we are in now, even though those numbers are just covering the new fiscal year, not yet the whole lot or the whole start of the new fiscal year. But that is something that I said that may be happening once the Japanese whales will decide what to do with bonds and other investments in the new fiscal year. So keep a close eye on what's happening going forward there with the Japanese foreign bond buying. Okay, if you see continued big outflows of foreign bond, that may mean that they are getting back home a little bit more, and that is usually that is relatively supportive for the yen while they are on this selling of foreign bond and potentially repatriating a few Japanese bonds as well. Okay, Chinese CPI came in weaker than expected. Again, they are March data, so before the big tariff announcements, we will have to see what really goes on with those data. Now that we know that they've been slapped on very, very hefty tariffs, I would expect that we see a bit of a jump there in the April data, but we will see what happens there. It did not really have a material impact on Chinese yuan. It's more all about the tariffs nowadays. Obviously, we had a few Swedish and Norwegian data, but Stocky and Noki they really trade with risk and also oils right now, especially in the case of the Norwegian kroner, and we saw a bit of a jump in risk. Also, Norwegian kroner and Swedish kroner benefited from it, but the Norwegian kroner is not holding its gains right now. Yes, the dollar Norway is a bit lower, but if you look at stuff like Euro Norway, we are trading back around and above 12, the big figure, which is markedly higher than where we were trading just a number of days ago. So for those trading Scandinavian currencies, the Norwegian kroner is not really benefiting from a lot right now, and that obviously has to do with the uncertainty in the Brent market as well right now. Okay, February data in Italy a bit lower, but really that's old news right now. Then looking ahead, we do have the US CPI today. Again, I'm going to say like the market is probably going to be reacting on it, but these are March data. Okay, these are March data. I would say that they are going to have only a limited impact right now, unless we see a big move outside of expectations. Okay, I wouldn't hang my hat onto the CPI data. What may get a lot more interesting these days, even though we need big variations here as well, is to see the evolution of what's going to happen with the jobless claims. Now that we know a bit more about the tariffs, etc., we need to monitor closely the job market because it's part of the growth picture in the US. And if we start to see big variations here, the market may react to them. Okay, usually I always say like, well, I mean, it's a weekly data point. I mean, it's going to go up and down, but as long as we stay in this 200 260, 270 or 180 on the downside zone we shouldn't be paying attention to. Perhaps the market will start to pay a bit more attention to those jobless data because they are the closest to what's happening in the job market. We've got a few more Fed speakers, Bank of England speakers coming up, so that's going to be interesting because now they know exactly what. Well, exactly. Nobody knows exactly what's going to happen, but they may have adapted their rhetoric just a little bit now that they heard from Mr. Trump scaling back or pausing the tariffs. Okay, right. That is about it. Tomorrow, but again, it is February data. We will have a slew of UK data out. We will have the GDP for February. We will have the construction output, the industrial production as well. They will still be have some importance because the market is, as I was already saying, the sterling is supported, and I am actually looking at the sterling relatively positive, but the market is, for the time being, only half buying the sterling story because it is reluctant to actually support too much all the Reefs plans, all the Starmer plans right now, and the gilt market in particular is still looking a little bit doubtful that everything is going to be okay in the UK. Everybody has her own opinion about those things, but I'm like perhaps a little more positive than what the market is really looking at right now. And then tomorrow morning as well, we will have, but again, March data, but we will have European also data coming out. We will have the European German data, Spanish CPI as well, coming out tomorrow morning before our next flow show. That was it for the data. So now let's have a look at what is going on. Euro dollar, yeah, this range is still there. The euro dollar range is still there. We are still trading in between 108.90 and 111. That's your range. I know about this longer term trend line here about 110.5, but we've now moved above, below. I know we stopped here, but it's a bit, it's getting watered down. I think we really have to look at what's happening here in this range or forming triangle. Has to be said that globally speaking, the dollar did moved higher on the back of the pause in tariffs, but is already coming back quite rapidly as well. And I'm still thinking that erratic, yes, but we may still be in a kind of formation where we are building a bottom here, and sooner or later we may go for a little walk, revisit those 112s. I still think it is possible when we look at how the market is actually trading currencies right now. So that's what I'm thinking about the euro dollar, and I have the same kind of view on the sterling. So despite the nervousness of the market in the gilt market, maybe as well somewhere in the FTSE lagging a little bit again, although we are trading quite a bit higher there as well, in line with other equity markets. So I'm looking at sterling a little bit more positive than what the market is doing. And as a matter of fact, we are now trying to break above the 128.60, 60, 70 resistance here, which to me means that we could pay a visit in this zone somewhere, which is around 128, 129, a quarter of a half for a starter, and then perhaps a visit back up to 130. I'm rather trading on the positive side still of certain currencies, at least against the dollar, right? I think the market is also showing us that the confidence in the dollar flip-flopping of Trump is not really positive dollar, barring versus a few currencies under which the a Chinese one, of course. But I got the impression that we may go for a little walk higher on the cable. If we start to fail here, then we're back in the range, and that then we need to eventually look back at what's happening in the low 127s. But for now, this is looking like a bit more positive picture there. Um, yeah, I'm coming to the yens. So yesterday, before that announcement of Trump, we had a visit under 144.5, but this longer term trend line here and the 78.6 of the move higher showed enough support, and we started to move off and then up again. And then obviously we had the announcement that tariffs would be paused. By the way, don't forget that Japan is negotiating with the US, and there may be talks about effects, okay? So be very careful with any headlines coming out of that side. Unless I missed something, they are talking over the phone right now. Akazawa, the new guy who will use, I think, lead the Japanese side of the negotiations with the US, has said that there is no specific date yet set for a visit to the US, but we know that everything is potentially going to go very fast between the US and Japan. So watch for, obviously, tariff headlines, but also watch for potential FX headlines, okay? Because we know that Besson as well has mentioned the FX. Trump several times mentioned FX for various currency, and Japan is one that is in the loop, okay? So that in between brackets. So we saw this sharp reversal higher, but look where we stopped. We stopped again right above 148. I think this level is relatively important for the range as well. If ever there would be nothing coming out of negotiations also, I think we could move closer to 150. But in the meantime, respect ranges. We see it on the euro dollar as well. Even though it's a pretty big range, we are doing the top and bottoms of those range in a matter of a few hours or a day. But respect the ranges for as long as they are there. That is what we as traders need to do, is to respect them. So you can counter trade any one of them, or if you are in a directional position, whether it be long or short, respect those levels. So take partials off. If you're long, take partials off, or everything around 148. And then if it breaks, you can still get back in. And if you're short, take partials off when it goes down, because the range is still there for now. Okay, that is just the way that I'm also looking at trading. I've done it with my long cables as well overnight. Took some off ahead of that 128.60, 65, and keeping some running. It's going a bit higher right now, which is pretty cool. But we need to always respect a few ranges, or when ranges are developing, we need to respect it when we are trading. Euro yen, David. It's been a while since I've actually traded it, and it's been a wild affair, right? Yeah, this trend line is being traversed far too often for my liking, so I'm taking it out. Let me see what I can come up with here. So we had this big bounce. That, barring those big spikes that we saw, that looks to me like we may start to try and range a bit, David. When I look at it like this, purely from price action move, we see that 162, just above 162, we're finding really good resistance. It's been trading there very quite often and rejected, bit in line with the dollar yen, obviously. And on the downside, okay, the bigger end of your range is going to be just below 160 towards 159, 59 and a half. So that, I think, is your initial range to watch. And then you look what's happening in between here, around 160 and a half or so. So you've got a bit of a range to watch here now, 162-ish. down to 159, 59 and a half. And in between, we may perhaps wait a bit for to see what's going to happen with the Japan-US negotiations as well, because obviously it will have an impact on all the yen crosses. For as long as that doesn't happen, I'm saying range, but if you talk purely from a risk point, pausing those tariffs is positive risk, okay? So, and if you talk about the yen pairs, when they react to risk, so if it's risk off, the yen is being bought again. If it's risk on, yen is usually being sold. But then if you look at especially on those crosses, it may be that we come back to those levels around here, and then we see what's happening there. If you break above 162, 2025, there's a potential to get back up into the 163s. That will happen if risk, for instance, on the equity markets, if we get even a better bond market, perhaps, if risk does better, this is potentially going back above. But to me, it looks like we may try to form, and after all those big moves, try to somewhere start to form a bit of a range, if that makes sense to you, David, on the euro yen. Okay, Dimi. Two that we spoke about on our shows, Aussie and the Kiwi. We said it, this could be a fakey breaky. For as long as we were below 60, 80 figure, it was looking still bearish, but be careful, if we get through it, we could do another big figure, and that's exactly what happened. Of course, with the help of Mr. Trump, but we did warn on our various shows yesterday that this could be a bit of a fake move down, especially that the Aussie recovered relatively easily above 60 at the open of our market, and then we went for a fly. Now here we are. Next levels here is around just above 62-ish, okay? 62, 62.10. That's our next hurdle. If that would break, we could see another move higher. But keep it in mind, this could be enough for this move if the dollar finds its footing. Right now, if I look across the board, the dollar is still pretty fragile, so we could be in for a retest at least of this 62 figure 10, and then we'll see what happens with it. And the Kiwi was indeed exactly the same. We had this fakey below, and I also said, watch out what's happening around 56. We are already moving back above. We were already moving back above this 55.40, and I said, watch out with 56. For as long as we are below, it may cap, but if we get through it, we may have a move into the 56.80, 57 zone. That's exactly where we are. So now my next level here is just above 57, 57, 10, 20. A bit in line with what's happening in the Aussie, 57, 10, 20. I'm not sure that we need to say that we're back into this channel, but it could potentially be if we move a bit higher and we get retests then of 56.80, 56.75 and hold. It could be that we are moving back into this channel, and then we'll have to look at the amplitude of this, and we can easily need an extension to it back up into the 58s. But one step at a time in these markets, okay? Because we know the situation is so fluid. Everything can change on a dime. On a Truth Social post by President Trump. So always be a bit careful with what you do, as we see also with the moves that are happening. Pure tech levels are not always respected, so you need to let a bit of breathing space on levels as well. So that's why I'm always looking at. I'm not sticking in here a level at 57.20, but I'm saying like watch 10.20-ish, and here on the downside as well, watch ranges like and on all my updates, I always say, like, I mean, algos are doing their thing. A lot of traders are doing their thing. The market is pushed left, right, and center. So we need to give a little bit of leeway to levels. Norwegian kroner, and then I may call. I know I need to show something else before I close. Norwegian kroner. I don't like what's happening in the Norwegian kroner, Dimitris. If we see, if we look at equity markets, they have seen a really serious moves back higher. Risk has seen also decent moves higher, and the Norwegian kroner has done the same. But we're virtually losing everything already, and I think sometimes some things have to do with Brent. If you look at Brent, we flew up to $66, and now we are already back below 64. I I I I can hardly become very bullish on the Norwegian kroner. Yes, we can see. I don't know if you're talking about the euro or the dollar Norwegian kroner. Yes, we may have seen, all in all, we may have seen those highs, but it's something. The dollar is one thing, so I would say there's a difference perhaps between trading dollars and other Norwegian kroner um, crosses. The dollar can be a bit heavy because it's heavy versus a lot of other currencies now. We're seeing euro dollar push higher, dollar yen come back down, cable pushing higher towards the 129. So there is a difference between trading the dollar Norwegian kroner and the Norwegian crosses. You trade the dollar, you can accompany the dollar moves. But if I look at the and then I move back to the cross. If I look at the crosses on Norwegian kroner and especially euro Noki, that is not a very bullish Norwegian kroner picture, okay? So I would say be a bit careful with the Norwegian kroner. I don't find too much bullish in there, especially that we saw this sharp move higher already again. Yesterday we went down to 1170 and we are already trading back above or around 12. Okay, those are pretty sharp moves, but it also tells me that Norwegian kroner cannot keep its rallies for now. I hope that's replying your questions. Okay. So the last one, and I'm not, yeah, equity markets are what they are, but I think the interesting one, and I said yesterday, watch what's happening in the dollar Swiss between 84 and 80 and low 83s. For the sake of perhaps S&P not having to intervene, it's moved up again, but 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 we saw this where is it? We saw this really sharp spike up, but we are not holding this 85 and a half. And as a matter of fact, we are right now already trading back down into low 14s. For dollar Swiss to reverse, I think we need to break above 85 and a half, 86. Okay. And I know a lot of people are trading Swiss. Swiss is a really good currency to trade when it's risk on or risk off. But also, and that's a bit the opposite of what's happening in Norwegian kroner, actually. It's not holding this 85 and a half, 86, okay? So it's a dollar issue, right? But then we have to come back on what is really happening in the Swiss as such. We are already nearly back down to the big support zone. I really would say pay attention to this zone because if we get below or, and then I'm going to the Euro Swiss quickly, if we get back below 92 and a half on the Euro Swiss as well, we may see SMB activity. I'm just saying we may, but SMB is for sure not going to be very happy if Euro Swiss would start to break those levels and get back to 92, for instance. I don't think that SMB will be very happy, and then we will have to see whether they come up with verbal or real action. Okay, so I think it's important enough to pay attention to what's happening in the Swiss franc. And that, ladies and gentlemen, closes the Flow Show for today. I hope I clarified just a few things for those who had questions. And we talk again tomorrow for more adventures in this tariff land. Have a good day.